Good afternoon, everyone, and welcome to Stock Market Today for Tuesday, March 18th. It's Alissa Coram here, and we did have a down day across the board ahead of the conclusion of a two-day Fed meeting. So all eyes are already turned to Wednesday as the market's rally attempt continues, but a little bit of a setback today. Here with me to discuss it all is my colleague, Ed Carson. Ed, what do you have for us today? Ed's going to be joining shortly because we've got a lot to discuss. And Ed, what do you have?
I have Mueller Water Products, T-Mobile, and EverQuote.
Okay, we'll check in on those stocks. Lessons, as always, that we can glean from them. And let's also start with a look at the major indexes today. The Nasdaq down 1.7%, so giving up notable ground today. Meanwhile, the S&P 500 off 1.1%, the Dow down 0.6%, and the Russell 2000 down about 0.8% or so, headed into the final stretch of the day. But taking a look at the Nasdaq, the rally attempt continues here. We are holding the lows, same for the S&P 500, ahead of a potentially whippy day tomorrow. What do you think, Ed?
Yeah, like the Nasdaq, it took the brunt today, and we've seen that the big Magnificent Seven, those names have really struggled. Today, Nvidia announced a big anticipated speech, and they announced new AI chips. But I don't know if they really surprised anyone. So that those chips, the Nvidia fell, the market fell. I mean, we're at a rally attempt. Tomorrow could be a huge day, but we could also, as you say, whip around. We could get the Fed announcement, and then we could have Powell comments, and then we could go around, and who knows? And that assumes that we don't have any new tariff headlines. And so it's just it's something that investors have to be on watch for. Either way, it would not shock anybody to see a big gain tomorrow or a big sell-off, and it's just something that it just feels like it doesn't feel like a real powerful move right here, but investors have to be ready in
Yeah.
case we do have an uptrend. It doesn't mean that you have to go full hog. You really don't, but you want to have those watch lists ready and just prepared to take part. If the market does give a bullish signal.
Right. So we're waiting for that potentially bullish signal in addition to looking at the watch list, because I do think that's very important. What's showing relative strength, what's making a big move. And again, this is all a big if. We don't know what the market's reaction is going to be. But another way to get exposure on a potential market turn is with ETFs, whether it's an index ETF, maybe it's a sector ETF. I know we've been looking at a lot of different ETFs lately to get exposure to different themes as well. So we will be definitely keeping that in mind and keeping everyone updated, not only throughout the week on IBD Live, but investors.com are reporting there and this show every afternoon. All right, Ed, anything else to say about the S&P 500 here in terms of where we closed on the day? About 2.3% below the 200-day line. So just to give us a little bit of a gauge there. Meanwhile, the Nasdaq well below the 200-day still, about 5%. So would take a little bit more oomph to get us back to that level for the tech-heavy index than for the S&P.
Yeah, less tech, less damage.
Mhm.
It would also mean that if you could have a good day tomorrow, and then there could be potential resistance at the 200-day line. I mean, there's all sorts of things. There's a lot of reasons why you could have it anywhere. I think the ETF idea makes a lot of sense because we have a deeply divided market, and I think that we can go to the Dow, we can go to the Russell, and those things. The Dow looks better because it has even less tech, and it has some insurance in there and some things in there that are doing relatively well. So that's actually pretty close to things. That's huge resistance there, but you could imagine that would look interesting if it broke above that. The Russell looks terrible, and that's just really terrible. But I guess I also wanted to get to QQEW. That one sort of fell back after a couple of days, and RSP. RSP is probably looks among the better things out there, and that didn't fall too much today, like the Dow. And one of the issues, though, is that some of the things that are leading, if the market took off and became risk on, some of those things may not lead. And so that
Mhm.
makes it tough to buy individual stock. And then traditional growth stocks are generally just really in damage. So an ETF like something like for the S&P or the Nasdaq could make a lot of sense just to try it out.
Mhm. And to your point, even with those more defensive areas, we'll see an example like today, they're not immune to pulling in when we get a broad market retreat. We've seen that today. We've seen that even in recent weeks. So something to keep in mind there as well as this market continues to play out with all the headlines and cross currents that we're dealing with.
That's right.
Okay, moving on. Speaking of ETFs, let's just check in on an area of strength lately outside of the US, and that has been China. KWEB, the China Internet ETF, with a decent weighting in Alibaba, broke out on one day, pulled back in a little bit today here, Ed. But your thoughts on how the China area is acting?
It's acting very well. I mean, it's pulling back a little bit. A few stocks fell, some others rose, but it all looks, as this K-Web shows, looks very healthy. The relative strength line has been really taking off in the last several weeks. So this and a lot of overseas stocks, definitely an area of strength.
Absolutely. And gold and the gold miners, this too has been quite strong lately. I guess the thing now here, Ed, now that we do have GDX clearing the highs in recent days from last fall, is this around the time we're going to see a bit of a pullback? Because we've seen a big move over the last couple of weeks, and this did fade off the highs today. So that would be my concern, is that it is starting to get a little stretched here. It's 13% above the 50-day. It was 14% above the 50-day in mid-February, and even less than that before pulling back last fall. We had pullbacks around 12% or so above the 50-day, 9%, so on and so forth.
I agree. A pullback's a risk at this point. Another thing is the Fed could really swing this because the
Mm,
Fed could say, because if the Fed says something, the dollar surges on the Fed, which it very well may not. But if it did, you could see gold stocks take a very quick tumble. So it's just something to watch. Dollar has been extremely weak in the last several weeks, and that's been a major driver. If that reverses, or even just a reversion to the mean a little
mm,
bit,
mm.
you could see gold come back some. And so, yeah, I think that's something to watch. But obviously, this has been an area of strength.
Yeah. Yeah. And we've been all over. That's why the relative strength line is so helpful,
Yeah.
because this has been on our radar for a couple of weeks for those who are so inclined to get exposure here. Let's now look at, speaking of the Fed, the 10-year Treasury yield. What are your thoughts on what we might see here as the Fed news unfolds tomorrow?
Yeah. How many rate cuts do they talk about, tomorrow? How many, in the future or imply? What's their sense of the economy? They're probably a little confused too. I mean, they're not really sure. We really, there's a lot of fear and uncertainty, but we don't know if that's really going to turn out. So you could see a lot of gyrations. I mean, sometimes I think the Fed's not going to do anything, and then the market really moves on the Fed, and Treasury yields, they've been sort of finding support around the 200-day, hitting resistance at the 21-day line. Will we break either way?
And I guess, before we move on, that's another good reminder for the audience is, just because we get a move one way doesn't mean that we're going to stay down or solidly up, right? We could see a reaction, then a counter reaction. It usually takes a little bit of time for the dust to settle, not even on the day, but even the day after, right? And that's why I think it makes this period so tricky, because we are in rally attempt mode. So I think a lot of investors out there are anxious to capitalize on a potential market turn.
Yeah, I think that's really important. Again, because there's a lot of economic uncertainty, Powell may couch things or things and say, well, if this happens. And you could imagine taking a bullish or bearish stance. And then people go, well, wait a second, that's not actually, and then, but, because a lot of things are open to interpretation. It's not like you can sort of see what the outlook is for the economy
Mhm.
right away. Again, it could all change. And so the Fed may say something and then people really take a different interpretation. They may be, especially this time, but we'll see.
Yeah. All right. We'll get our stretches in tonight so we can be extra flexible tomorrow.
Good
All
idea.
right. MWA. We'll need to hydrate too. Here's a look at a water company. MWA. This is Mueller Water Products with an RS line blue dot today on the verge of a breakout.
Yeah, it seems sort of boring, but you look at the growth. The accelerating revenue growth. Look at that. The earnings have been a little choppy, but choppy in a good way, like very strong, strong, okay, strong. I mean, it's not like it's been, up and down, really strong trend here. So it sets up bases and then it goes and RS line at a new high. There's a lot to like here. This was our stock of the day. Fire hydrants, they do a lot of things here. So it's just a sort of it's somewhat of a safe area. And again, what seems like safe can turn out to not be safe, but I can understand why people would be using this as a safe haven in this environment. Again, it shows technical strength, it
Mhm.
shows earnings, and it seems to be a safe haven. Ticks a lot of boxes in this kind of market.
It sure does. And speaking of the bullish technical characteristics, I love the volume profile here. A lot of blue volume spikes. There's not really any red volume spikes going back to last summer as it's made that powerful move. Ed, I guess the one concern here for me would be, and you've pointed this out for a number of stocks in the past, can it really make progress after a breakout? Of course, we do see stocks that change personality after a breakout, but right now the current personality is it likes to pull back shortly after breaking out.
I think that's an excellent point. We definitely have that situation where, yeah, I mean, this is maybe one that's better on the 10 week. So great point about the volume. So it's a real strong stock, but it doesn't mean it's going to go anywhere.
Yeah. And I guess let's see how far it is above the 10-week. It's 9% above the 10-week line. So for position traders out there who like using that as a line in the sand, as a risk management level, that's something to keep in mind there as well. Within 10%, I would say is reasonable, but the closer the better for me at least. So
Yeah.
especially in this kind of market. But one to watch here. I had a really nice move on the last earnings report. Okay, next on the list, another stock that has a steady tendency and that, but is able to go on runs, and that is T-Mobile TMUS, a relatively orderly pullback here to some key areas, Ed.
Yeah, and it's holding up much better than some of its peers, and it's just been stronger than some of like Verizon and Team. And it just has stronger. Verizon had a big sell-off,
Hmm.
and it's trying to come back, but that was really disappointing. But T-Mobile, yeah, it came down, probably somewhat reaction to that, but just held the buy point, bounced back. It's right around the 21-day line. I mean, look, there's sort of a downtrend line that you could draw. You could do that. I mean, it's trading relatively tightly. It's not a tight pattern, so it doesn't have that. I mean, maybe it forms a base, maybe it pulls back or lets the rising 50-day line catch up. There's a variety of things here. I think this is a point where I don't see this as really actionable right now. You could, if you wanted to, you can always do it. But I think you do want to be looking for setups, but you also just want to be looking for stocks that are showing relative strength, that are holding
Hmm.
key levels, because it could be that this correction goes on for a few weeks, or we have some starts and stops. So you definitely just want to be keeping track of these high RS names.
Yeah, that makes sense. And let's take a look at EVER. This is EverQuote in the insurance area. A little bit more of a volatile name in insurance, which we've seen take the lead on a lot of our screens lately. EverQuote breaking out on Monday, but now a sharp pullback. And I guess in terms of potential warning signs here, you never know when a breakout is going to fail, even if a stock checks off all the boxes, right, Ed? But this one is a little bit more whippy than a number of other names in this group that also pulled back today, like Brown and Brown, Allstate, that kind of thing. So, what are your thoughts on this post breakout action today?
Yeah, a lot of insurers fell back today. Most of them looked a little better. Yeah, as you were pointing out, that's a great point. This one has tremendous growth, at least because it turned profitable. So there's sort of that turnaround. Its growth is supposed to be stronger in this coming year than a lot of the other insurers. So it's like, okay, it's more of a growth stock.
Hmm.
And it came in and it basically had this huge move and then formed a handle. It was acting so well. I mean, again, and that's it. It was more volatile, and that is an issue though. But it's like And that's an issue when you have sell-offs, is that you can have things come down a lot more. That's, even
Mm.
though there's a lot of things to like, and it could still work. It could bounce back tomorrow and say, aha, all you weak holders, I knew it was going to work. It's like, well, you don't know it's going to work. Sometimes they just keep falling. It's not a
Mhm.
good sign when a breakout comes in that hard like that. And it just shows you that when you're buying these defensive names, which you think are safe havens, it isn't necessarily. And I understand this is a little bit more of a whippier safe haven, but still,
Mhm.
it did check a lot of boxes. It looked pretty good yesterday, and sort of an expectation breaker today.
Right. And I think this is a great example of one of the really good ways to use a stock's average true range in your
Yeah.
analysis. If your goal is to buy a defensive, steady stock, then you likely want one with an average true range that is pretty mild. And I believe we looked at this on IBD Live either yesterday or last week as it was setting up. And I believe I have a list here. ATR. Let's pull that up. Let's see if I added it in here. Okay, maybe I didn't, but EVER, let's check it out. Let's see the ATR on this stock. So the average true range, its movements on average over the last 21 trading days, almost 7%. So if you are comparing that with Brown and Brown, for example, which we looked at, that's less than 2%. So if you're looking at stocks that are more volatile or less risky, that's how average true range can be really helpful in that stock analysis scenario.
Yeah, and in a better market, you're going to be more willing to take higher
Yep.
ATR because you want that upside. You're thinking
Yeah.
more reward than risk. In this environment, the rewards are just less than usual, but the risks are still there. They're magnified. So if you're going to play, yeah, lower ATRs are often the way to go. This was still disappointing, but to see this name come down again,
Mhm.
you look on a weekly, it doesn't look so bad. And that's
Right.
another thing. Oh, okay. But it's easy for me as somebody who didn't buy it near the top yesterday to say, oh, it
Mhm.
doesn't look too bad. But yeah, so it's just tricky. This is why, it's just much more defensive kind of market. If you do things, you're just dipping a toe into the market rather than plunging in.
Mhm. All right. Well, totally agree, Ed. And I know you and Jed Graham, our economics reporter, you're going to keep us up to date on all the Fed news coming out tomorrow. So we're thankful for that.
Yeah, we'll have live coverage like we're trying to do with a lot of events, but yeah, really try to get on that, and a lot to say from the Fed and then from Powell. So we'll definitely be running that tomorrow afternoon.
Yeah, so definitely make sure you're keeping tabs on investors.com, looking at that live coverage. I'm sure you're going to be sending out alerts to those with the IBD app as well. So that's another great way to stay on top of all of the latest information and the analysis from our reporting. So thanks, Ed.
Thank you.
And thanks everyone for tuning in. That is it from us for today, but we will be back with more tomorrow morning on IBD Live, investors.com/IBD Live for all the details on that. We'll see you there in the morning, and then we'll also see you right back here tomorrow after the close.